What do you see in Best Buy, Anthony?
So really what it comes down to is that Best Buy is the largest television retail in the U.S. They have about a third domestic market share. They're also the third largest appliance retail in the U.S. behind Home Depot and Lowe's. I estimate between appliances and televisions, that probably accounts for about 25, maybe even 30% of their sales. And so if existing home sales in particular continue to pick up, I think that will be really good for their appliance business. I think it'll be really good for their television business. And like I said, I mean, a lot of companies that are more sort of direct plays on the housing market, like think an RH, a Williams-Sonoma, even a Floor & Decor, they're trading at huge multiples right now. Best Buy, not so much. So that's why I identified Best Buy as a stealth housing market play.
It's an interesting pick, but and as you say, let's look at some of those other companies that are maybe more directly associated with housing, like an RH, like a Floor & Decor, Williams-Sonoma, and so forth. Do you see the upswing in the housing market benefiting them or not as much because they have a higher price to begin with?
Right. Yeah, I mean, so essentially that's my argument. It will certainly benefit them and, quite frankly, probably much more directly than Best Buy, but that's already much more priced into those stocks. Just in the last few months, we actually downgraded both RH and Williams-Sonoma from buys to hold ratings, largely based on valuation.
Yeah, interesting. What do you see for the housing market this year? I mean, the numbers in February were quite favorable compared with January. Interest rates presumably are going to come down later in the year. That should be a bit of a help for housing. But there's still a lot of issues with inventory.
So I'm incredibly bullish on the U.S. housing market right now. Part of that is the fact that you are coming off of a very, very easy comparison, particularly for existing home sales. But part of it is just based on the data we've seen, right? So we have had sequential improvements in existing home sales in the last 2 months. The 4.3 million units in February were the highest level since February of 2022. And this is all before mortgage rates really come down. So the 30-year fixed mortgage rate is still almost 7%. So yeah, we think that as the Fed starts to cut rates and mortgage rates come down in turn, that will lead to a significant acceleration in existing home sales, even from where we are right now. And to your point about inventories are slowly but surely getting better.
Well, that is good news. And you look at some of the fundamentals of the U.S. economy, they would favor housing. When you have wage growth coming in at plus 4% for many, many months, which has been the case, when you have things like jobless claims falling and the unemployment rate staying where it is, housing is highly related to income and jobs, correct?
100%, 100%. And you nailed it. You nailed it right on the head. You hit the nail right on the head. I mean, you have unemployment less than 4%. We've had now, I believe it's almost 2.5 years, over 2.5 years of at least 4% year-over-year wage growth. The last 10 months has been higher. The wage growth has been higher than the rate of inflation. So consumer purchasing power is actually getting better right now. So yeah, I think there's a lot of tailwinds for better home sales in 2024.